I know Tom wants to talk about the JOLTS numbers. Just briefly, John, we mentioned where cable is on the day. Bounced off session lows, 129.32 on sterling versus the US dollar. If you can, save us all. In 45 seconds, John, what on earth is going on?
Well, to be honest, I don't know that we've had the realism in the negotiations that we need to have. And there's been, I think, a feeling on the part of the UK administration that they can somehow push through some relationship with the EU. And we have to remember, it's a negotiation. And there are real issues that need to be resolved. I suspect they will be resolved because it's in everyone's self-interest, but I don't see the path to that resolution at this point, to be perfectly honest.
Well, and the backdrop has changed dramatically since the beginning of these negotiations. And to get to the economy, in particular, the reading that we're going to be getting on the U.S. economy, and it is representative of what we're seeing in many developed markets worldwide. We're going to get that JOLTS survey at 10 a.m., the job opening survey. What will be the structural unemployment rate when the pandemic is over? How much higher will it be in the United States than it was pre-pandemic back in 2019?
Well, first of all, I think it's very encouraging, just talking specifically at the 10 o'clock number, that we've been seeing a pickup in job openings. That tells us that the labor market is trying to come back, as do the gains that we've seen in the employment numbers last Friday and in recent months. Having said that, the structural unemployment rate depends critically on whether you have a vaccine. If you have a vaccine, and people can become comfortable getting socially together, we can have a surveillance night out at a bar in New York City and have a few beers or whatever wine it is that Tom wants to drink. Then the structural unemployment rate should be, I think, not much different than it was prior to the pandemic. Yes, it will be difficult for some number of companies to come back, but we're seeing very high levels of business creation. People will start up. We're going to have a repricing of commercial rents. All of those things need to happen. But I don't see any reason for the structural unemployment rate to be significantly higher than it was pre-pandemic. It may take us a long while to get to that rate, but I think we can get down to 4% unemployment rates once we have a vaccine. If we do not have a vaccine, then the last mile is going to be very different. We're going to have 7/8 of a pie, and unfortunately, the service sector is going to be that slice in things like leisure and hospitality that's going to be very difficult to bring back. But I'm hopeful that these trials will go through. How long it will take, I don't know. That we'll have a vaccine. I'm hopeful it will be effective, and if it is, there's no reason for that unemployment rate to be higher in the future than it was pre-pandemic, but that may be a couple of years out.
Okay, so if we get the same low unemployment rate, will salaries stay the same or will they be coming down? In addition to people actually getting jobs, they're just getting paid less.
Well, we're not seeing that in the data. Average hourly earnings have been higher. And this is a challenge for business. Now, structurally, part of that is because lower wage individuals have been disproportionately hit by this pandemic. They've suffered a greater portion of the job losses. But I think what we need to see is companies focus on productivity gains. And if that happens, there's no reason for the real wages to be lower than they were before. But it is an obstacle. We are seeing strong gains in real wages for those who are currently employed, not weaker. And that represents an obstacle to profitability. And profitability after the virus represents an obstacle to a return to full levels of economic activity.
John, what does the unemployment rate do here in the coming weeks, months, and quarters? I mean, give us a dynamic here of what we should see for unemployed America.
I think it continues to grind lower. Now, we had a surprising drop last Friday, and we did not have a drop for bad reasons, that is, people dropping out of the labor force. In fact, we saw people returning to the labor force and labor force participation rising. So that is good. there's another measure of unemployment, which in some ways is difficult to understand, which is the large number of people, much higher than the number of people who are unemployed, and much higher than the number of people who've lost their jobs, who are still on unemployment benefits. So there's really two measures of unemployment. But I think in terms of the unemployment rate, the U3 rate, I think that comes down probably by the end of the year. The way we're going comes down to around 7% or so. But once we have a vaccine and once we can start getting workers in hospitality and travel returning to work on a stronger basis, we've had some encouraging recovery in that area, then I think the unemployment rate can be down towards 5 or 6% by the end of 2021. And in fact, the unemployment rate is coming down faster, and the recovery is going a lot faster than it did coming out of the Great Recession.